All right, welcome to ProLink Capital Solutions. Today we're going to go over the secret lenders list and what this list can do for you, what it's going to show. We're going to show you how to even apply for lending, what they're looking for, how you can see that, how you can know that. So if you haven't got this list already, go below. There should be a link where you can get it. Actually, there will be a link where you can get it, or you can go to 4, as in the number, surefunding.com/get-it-free, or go to ProLink-capital.com and then go to the resources section. You'll be able to find it in there. So what this list is, basically, it's a list of the lenders, probably all lenders that you've seen and heard of before, maybe some more. And what the list shows is the credit bureaus that they pull from. And it's all based on what we've seen with hundreds of clients and our own experiences. Basically, how it's going to look is you're going to see the name of the lender. It's going to show what bureau they pull from, the credit score that you need, and then what you can get with that. As you can see in this example here, Capital One Venture Card, they pull from Experian and TransUnion. And with a 650 credit score, you can expect around $5,000. Again, it's not 100%, but that's from what we've seen. Also be reminded that your geographical location can definitely impact which credit bureau a lender will pull from. What this list is, it's a collection of what we've seen, but our clients live in various places all across the nation. And also remember that banks change their policies, and that if you experience anything that you went through the list and you applied and then you got something different, please let us know. We want to keep, we want to help you, but we want to help everyone. We want to keep everyone updated. And also what you're going to get with this list, I'm going to go over how to maximize your applications that you're sending in. Whether you're doing credit cards, loans, anything, what you're going to find out here is great for stated. If you're doing full doc applications, you can't really change anything. With stated, there's a little bit of playroom that you can actually do, especially mainly in regards to inquiries, but we'll go through everything, and I think you'll learn quite a bit. So inquiries is the first. I think first and foremost, this goes without saying. If you don't know, now you do, because too many inquiries, regardless of your credit score, is going to result in a denial. Typically, the way that these algorithms work and that the software works where people are applying, if you have too many algorithms, it's just not even going to accept you. I would say 99% of the time, if you have over 5 or 6, 7, the closer you get to 10 inquiries, it's just not even going to work. 14, yeah, it doesn't even matter if you have a 700 credit score, you're not going to get approved. So remember that. The optimal range is really 1 to 2. Obviously less than that is great, but 1 to 2 total on your credit report is optimal. That'll get you a really high credit score too, depending on your credit profile. But what's widely accepted is no more than 4 inquiries in the last 6 months. Typically you'll be able to get by with that. And then a big tip for you here is that if you open multiple browsers, let's say you're going to get a credit card, you know which one you want, and you have a few others, apply for them all at once. So open multiple browsers and fill out all the applications. Don't submit them until they're all done, and then submit all the applications very close to each other in time, less than 5 minutes apart. Obviously, I don't think you need 5 minutes to do that, but submit them all really close in time. What this is going to do, there's a delay between you applying for that and getting an inquiry, it going to the credit bureaus, and then reporting again. So by you applying for them all at once, basically if you have 4 inquiries already and you apply for 4 more credit cards at once, they're all going to show that you have 4 inquiries instead of having 4, applying for 1, and then applying for another, and then just adding inquiries on your applications. This will actually help keep your inquiries low when you're applying. The other thing that you need to remember when you're going through your application is credit profile. you need to remember before you go to funding that age always trumps credit limit. It looks good to a lender when you have age on your credit profile. It shows responsibility. Again, I'm talking if you have a positive credit profile, it shows responsibility, and it shows that you're somewhat of a safe lender. You've been doing this for a long time. What's best is to have an age progressional profile. If you're looking for trade lines, authorized users, you definitely want an age progressional profile. What I mean by that is have an old account with a lower limit, a medium aged account with a medium limit, and then a newer account with a high limit. This shows that you've progressed over time, and especially if you get great trade lines, which the ones we provide are great, it'll definitely help boost your stance in the eyes of the lenders. And having a good mix of primary and authorized user accounts is something that the lenders like to see. But always remember that if you don't have a high limit credit card or loan or anything on your credit profile, you're not going to get that from a lender. So if you have a $2,000 credit card and that's the highest thing you have on your credit profile, and you go apply for a $20,000 credit card, you're not going to get it. That's not how it's going to work. They can't make sense of it because they're not going to be the ones that go on a limb and give you $18,000 more than what you've shown that you can work with. So authorized users are a great solution for this. You can get one with a higher limit on it. It shows that you have at least part of that, and you can work with that. So if you have a $15,000 trade line credit limit and you go for a $10,000 credit card, it's a lot easier for the lender to then accept that. Another big thing is credit usage. I know there's a lot of people, and if you go search on YouTube or any other place, they'll say below 30%. Some say below 50%, but below 30% is good, especially for the algorithm for your credit score. But what you mainly want to do is keep it below 20. And to be completely honest with you, below 10% is even better. Don't go above 10. If you're above 10, I would suggest getting an authorized user account to basically push you back below 10%. But to give you a little piece of knowledge, the absolute optimal range that we've found is between 3 and 7% of usage on credit cards or line of credit. Yes, the system is rigged. What this 3 to 7% shows that you have great responsibility. You pay everything on time, but it shows that the lenders are going to make a little bit of money at a very low risk. So they like to see the 3% to 7% usage. Another thing that a lot of people, I think this may be probably the most overlooked thing on applications, is your address. Number one, having multiple addresses on your credit report doesn't look good. It looks like you move around a lot, and when you move around a lot, people think that you're not reliable. So remember, multiple addresses on your credit report doesn't look good, and the length at which you state that you are at an address when you're filling out an application, the longer is always better. It looks more stable, it looks like you've been there, and you're not going anywhere. A minimum of 2 years when you're putting on the application. We're not saying that you should lie. That's not what we're saying. We're just saying if you haven't lived somewhere longer than 6 months, and then you go apply for a credit card and you get declined, that may be why. They like to see that you're in the same spot. It looks safe to them. So a minimum of 2 years, but the optimal range is 5 years and up. If you can be at your current residence for 5 years, that looks great in the eyes of the lender. And another thing that, again, almost next to address, I think another thing that people overlook a lot is the income. Income plays a very large role in a lender choosing to lend to you because of the ability that your income affords you to pay any debt back. So the more you make relative to the amount you borrow increases your odds of approval. So let's say you make $50,000 a year and you want to borrow $50,000. That's typically not going to happen because this is unsecured. The lender can't justify it. But let's say you make $250,000 and you want to borrow $50,000. It looks a lot easier for the lender to do it. Again, that's still a lot of money that they're giving you. So just keep in mind that relative to the amount of income that you put down, and the amount that you're looking to borrow, you have to keep in mind what looks safe to them. Now, also remember that if you have a high dollar credit limit trade line on your credit profile already, and you make a good income, it significantly increases your approval odds. So if you make $250,000 and you already have a $30,000 credit card reporting and everything else is in good standing, and you go apply for a $30,000 credit card, your chances of getting approved for that are significantly more than if you were to have a lower trade line and a lower income. Kind of common sense, but I think a lot of people overlook that. So basically, if you need any help with this, we can do this all for you, or we just want to make sure that you know everything going into it and that you're prepared. So if you haven't got your list yet, make sure you go get your list. If you need help adding positive history to your credit report, we do that. We can definitely help you. But make sure you go get your list. Check the link below the video, and we look forward to helping you.